Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to be ranking Swiss stocks from the SMI and the SMIM index from the SIX stock exchange. And just to be sure that we are on the same page, so we have the SMI index, and that's the 20 biggest companies in or on the SIX stock exchange. And then we have the SMIM, and that are the next 30 biggest companies on the SIX stock exchange. But I'm only including 47 stocks right now because we have a bit of an overlap with Roche. So you have Roche I from the SMIM index that I don't include into the list because I already have Roche GS from the SMI index in my list. So I don't think it's necessary to also include Roche I. Then you have Lint PS from the SMIM that I don't include because I have already Lint N in the SMIM in my list. It's important that you know that Lint M, it's quite expensive. It's 108,000 and a bit. And Lint PS, it's a tenth of that price. So here, to invest in Lint N, you need a lot of money, and for Lint PS, you need a lot of money. So for me and my wife, it's definitely not a contender because we can't afford it at all. But maybe for you, when you have the money, you can find the data later on here on my video. And then we have the same thing for Schindler P. That stock I didn't include because I already have Schindler N in my list. So when I order all the companies according to the market capitalization, you see that Nestle is still the top company on the SIX stock exchange with a market capitalization of a little bit over 230 billion Swiss francs. We have also Roche that is getting closer and closer because Roche is performing better on the stock market since the beginning of May, and Nestle is still struggling. Maybe it's going to change because they recently announced that the CEO is changing. And if you know the story about Starbucks, where they announced it's going to take a bit more than a month before the CEO is going to change there. But on the day that they announced it, that they attracted the CEO of Chipotle to replace their current CEO, the stock went up over 20%. For Nestle, I don't think it's going to be the case because the CEO that is going to, the new CEO that is going to replace the old one, is already a part of the Nestle family. So normally, I don't think it's going to be that huge of an impact, but you never know. And then we have another one from the pharma industry in the top three, Novartis, just like Roche in the pharma industry, and it's 203 billion, a little bit over 203 billion Swiss francs right now on the Swiss stock market. Then we have 7 other companies here. You can pause the video, write everything down if you want all the information for the next slides as well. So I'm listing all 47 all the time, 10 10 10, and then the last one it's only 7. But I'm only going to briefly on the things that I want to note. So on the next slide with 11 till 20, it's market cap stocks. You see that Lint N, it's from the SMIM, and it's actually in the top 20, but it's not in the SMI index. Probably because it's not traded enough with the high cost of the stock, of course. But it's 25 billion. And you will see on the next slide that Logitech has almost less than half of the capitalization of Lint, but still Logitech is in the SMI index and Lint isn't. Schindler N, it's the same thing. It's also in the SMIM and it has a capitalization of 25 billion. And Straumann N, it's also SMIM stock, but has a market capitalization of 20 billion. So 3 stocks from the SMIM index that actually have a higher capitalization than 3 stocks of the SMI index. So that's really important that you know that. Of course, you can say the same thing about the Roche I stock, because the Roche I stock is also part of Roche company, of course. So you can say that that has a higher capitalization as well, but I didn't include it, so I'm not going to go further into that. On the next page, you see the first one that has a negative earnings per share. So Sandoz Group, it's a negative earnings per share of 0.02 cents, Swiss francs, so 2 cents. And if you look then at the dividend of 0.45 that they paid out, that means that they have a payout ratio that is negative. So they actually used capital that they had on their running accounts to pay out a dividend, and you know that that isn't actually good. But some companies do it just to maintain the dividend and the consistency. And for Sandoz, it was a minor setback this year, so it's going to change this number, and then of course the payout ratio is going to change immediately back. So in this regard, you can more or less disregard the payout ratio for Sandoz right now, but just know that you don't have a guideline for the PE ratio right now. So in that regard, for me, I'm definitely not investing in Sandoz right now. And then you have the other ones, Sonova, Geberit, and Logitech, that actually have a lower market capitalization than the 3 biggest SMIM stocks. But yeah, that's just the way it is. So we can go over to the next ones. So here you have Barry Callebaut. It has a price of 1,368 compared to Lindt with 108,800. It's much more affordable if you want to invest in chocolate. And the factory of Callebaut in Belgium, in Wieze, it wasn't far from my parents' home. And sometimes when we are there and the wind is coming from the right or wrong direction, for some people it's the wrong direction because they don't like the smell, because it can be really strong, that's true, but yeah, I like chocolate and I like the smell. It's already quite reduced when it reaches the home of my parents, so then it smells quite nice. And then the last 7 companies of the list, there you have the worst performing stocks. It's IMS Osram with an earnings per share of minus 0.29, and Meyer Burger with minus 22.56 earnings per share. So with a price of 4.09 and an earnings per share of minus 22, yeah, actually you should be here minus 18. So they augmented their capital. IMS Osram did the same thing, and the market capitalization is actually quite low. Here Meyer Burger doesn't even have a billion market capitalization anymore. So for me, those 2 stocks are actually also out of contention. So it's only 45 that are worth investing in my eyes. So let's go on to the 10 best stocks according to the price earnings ratio. So here you can see, for me personally, the PE ratio needs to be below 18. Yeah, 18.15 and 18.31, you can say, okay, that's borderline. But For Swiss Life, it's insurance company. You have the opportunity to also invest in Zurich Insurance or in Swiss Re. So those are also insurance companies. But if you like Swiss Life more, yeah, it's up to you. But for me, the PE ratio is a bit more decisive. And then, of course, the payout ratio. If you look at the one from Swiss Re, it's below 70%. And then for Zurich Insurance and Swiss Life, it's around 90%, so 10% higher. And for me, I know it's yeah, for me it's not that great for investing in those stocks. I know it's the payout ratio for insurance companies is most of the time higher, but I still don't like it when it's way up there. Swatch Group, yeah, the price to book value is 0.77 right now. So in that regard, it's a good buy. But for the PE ratio, it's just above my level. If it drops a little bit and it drops below 18, yeah, with a dividend yield of 3.58 and a payout ratio of 65%, it's still for me a bit too pricey. And then we have Holcim, Swisscom, Adecco, and BKW. But Adecco with a payout ratio of 143%, that's a bit difficult as well. So for me, the top three on this list is Holcim, Swisscom, and BKW. You also have Flughafen Zurich and Nestle that are below 21. So they follow very shortly after Logitech. I thought it was important to mention those two because I already mentioned Logitech, and yeah, if you look at it, it's 20.78 compared to 20.79 or 20.97. It's quite close to each other, so you can look them up if you freeze the previous frames where all the 47 stocks were listed. You can find the other values for the PE, the EPS, and the dividend yield for Flughafen Zurich and Nestle as well. Then we can go over and look at the dividend yield. Yeah, my channel, it's about dividend investing, so I can't leave this table out. So we have Adecco with a dividend yield of 8.59%, but of course a quite high payout ratio. Zurich Insurance, once again, it's here, 5.32 and a payout ratio of almost 91%. Swiss Re, a little bit better with only a payout ratio of 70%. And then you have Julius Baer from the SMIM index with a dividend yield of 5.16, but a PE ratio that's 27.51, and also a payout ratio of 142, just like Adecco, quite up there. Swiss Life, I already mentioned it on the previous page. Baloise, yeah, PE ratio above 30, so not that great. Payout ratio also above 100%. Helvetia Holding, once again, higher than 120%. So also not that great. P ratio 25.57. And then we come to Swisscom. So up till now we have not that many great stocks. Maybe Swiss Re is the best up till now. But then Swisscom 16.29, the PE ratio, a dividend yield of 4.12%. So quite nice if you follow the rule of 300, because there you are aiming for a dividend yield of 4%, and your payout ratio is 67.09%. So a little bit over 60%, but Swisscom, quite stable company, and as a dividend investor, that is what you like to see, of course. Kuehne+Nagel, P/E ratio, although it's not performing that great on the stock market in the past periods, past year, they are still up there with a PE ratio of 27.39, and the payout ratio is also a bit high for my liking. And then you have Swiss prime side, so that's the real estate sector, and there you have payout ratio that is also quite high. So looking solely at the dividend yield here, not that many great companies. So Swiss Re and Swisscom, but they are also payout ratio above 60%. So dividend yield, it's not everything. So you should definitely look at other things. And one of the things that are really important in order to know whether or not the companies are able to maintain the dividend yield, so the height of the dividend and then the dividend yield, of course, is the payout ratio. So if we order the stocks according to the payout ratio, these are the 10 best stocks. So Alcon only has a payout ratio of 12.70%. So that's quite nice. That's the lowest that you can find. And it's more than half of the next one that you can find in the list. So Logitech, there it's 30.93%. So Alcon is really out there, but yeah, look at this, the PE ratio. If you look at the PE ratio, then I rather go for Logitech, although it's higher than 18, but you know what I'm talking about. So BKW below 18, below 60, and a dividend yield of 2.20%, and they are still rising it. So that's a nice company here in the list. Tecan Group, their payout ratio just above 38%, but the PE ratio is quite high. And of course, yeah, you see here the other ones. It's almost always the same. The PE ratio is quite high. Richemont is a bit of an exception, but just like Swatch, they are struggling a bit with the fact that watches aren't selling that great in China, so they also have the China problem. A bit less because they are still performing quite nice. So Swatch is suffering a bit more. And yeah, Strawman, PE of 70, man, that's so high. And still people are buying it. So I don't know what is in their heads that they think that this is a great company, but a PE of 70.28, for me, it can be the best company in the world. When it's a PE of 70, I'm not touching it for sure. And then I decided to include these two final tables, and it contains the 15 best stocks according to the dividend yield combined with the payout ratio. So the payout ratio needs to be below 60%. I didn't order them according to the payout ratio, but according to the dividend yield. So, and here you see that Holcim with a PE of 15.28, a dividend yield of 3.44, and a payout ratio of 52.53% actually scores the best in this list. Then Flughafen Zurich is it's a bit high, the PE ratio, but still the dividend yield and the payout ratio are quite nice. And then you have BKW with a PE of 17 and a payout ratio of 37.53 and a dividend yield of 2.20. So quite nice. Here Callebaut is here again. And yeah, I mentioned PSP here as well because it has a payout ratio of just above 60%, just like Givaudan with 60.99%. And PSP is then scoring a little bit better with 19.92 as a PE ratio, but Givaudan with a PE ratio of 37. Yeah, I mentioned it because of the payout ratio, but if you look at the PE, not my kind of tea. So is Holcim the winner? Here you see the track record of the past 5 years, so the price evolution of the past 5 years. So it's on a all-time high almost, but still it's quite nice valuated. But it's definitely not financial advice, and although it's on a all-time high almost, you should know that time in the market beats timing the market. But you need to have money, of course, and as you know, our money is going towards buying ETFs to diversify our portfolio. Sometimes we buy satellite stocks, but for now I can't do that because yeah, we are just lacking the money to do it. Maybe I should start another portfolio on YUP or something like that, where the trading costs are a little bit less than on Swissquote, so that I can trade with a little bit less costs, so that I can buy with 150 or 200 Swiss francs into some stocks like Holcim, or you have the other one here, BKW, also scores really good. And as you can see here, it's also quite high, so near its all-time high. And there it's important that you know that, like it was stated on the previous slide, time in the market beats timing the market. So you can wait until it's going down to 125 again, but nothing guarantees you that it's going to happen. Can be that there is a problem with the monkeypox virus, with the clade 1b that is going around. The first case in Europe, in Sweden, was detected a few days ago or a week ago, and in Africa it's definitely not going great with that disease. So we don't know what is coming next. It can be another disease. It can be a trading conflict between India and China, India and America. You don't know it. It can be all kind of stuff that suddenly the market sentiment is going down. Now the market sentiment on Friday was quite good because Powell gave a great speech that they are going to drop the interest rates in September, probably in America. So yeah, then the stocks are going up. The day before, they feared what Powell was going to say, so the stocks dropped with 1%, and the next day the stock market went up 1.1%. So it made up the complete difference. It's unbelievable how quick things can change. But all what I said today, it's not financial advice. It's just a summary of all the data that I listed. I hope you enjoyed it, and with that being said, see you next time on my YouTube channel. And if you hit that subscribe button, that will make my day. Hitting that like button, it's not necessary, but if you do it, it helps spread my content to other people that like this kind of content. And with that being said, thank you for watching, and see you on the next one on my YouTube channel. Bye.